Beautiful Friday morning right here in Lagos, Nigeria. Good morning, good evening, wherever in the world you're watching from. It's Business Morning live on Channels Television. I'm Ladi Williams. It's great to have you join us. Let's kick off your morning now with the markets. We see all prices were near flat today as market participants weighed concerns about steep inflation with optimism that China could see energy demand tick up. Brent crude futures lost 5 cents to trade at $92.33 a barrel, while the WTI futures rose 7 cents to trade at $84.58 a barrel. Brent was on track for a weekly gain of 0.7%, while WTI was expected to fall 1.3%. To fight inflation, the U.S. Federal Reserve is trying to slow the economy and will keep raising its short-term rates target. And that was one of the Fed chairs there, Bank of Philadelphia President Patrick Harker, to his statement on Friday. Meanwhile, Beijing is considering cutting the quarantine period for visitors to 7 days from 10 days, according to Bloomberg reports. And U.S. soybean futures rose 1.4% yesterday as a good export data buoyed hopes that overseas buyers will book more deals in the coming weeks. Corn and wheat futures also were firm, with short covering and technical buying underpinning the market after prices for both commodities dropped near the low end of recent trading ranges earlier this week. The U.S. Agriculture Department said earlier that soybean export sales totaled 2.36 million tons in the week ended October 13th. That's the biggest weekly total in a year. And with economic headwinds weighing on Nigeria's macroeconomy, the governor of Edo State, Godwin Obaseki, believes that the subnationals have the responsibility to explore their potentials to the benefit of the citizens. Mr. Obaseki shared his perspective with industry leaders in the private sector who were guests at the 2022 Edo State Business Dinner, which held in Lagos. Take a listen.
Nobody saw COVID-19 coming. Nobody saw the Ukrainian war, but with all of that has compounded our problems, the huge debt service, the reduction of allocation to states that we're to states as we're witnessing, high inflation, particularly food inflation. Only God will help us by Christmas, at the time the floods recede and we see how much devastation has occurred this year's harvests. We're all dealing with a depreciating currency. We don't know where it's going to land. And we have insecurities. With dwindling federal allocations, we see opportunities because it's the states that host Nigerians. The Nigerians live in states and local governments. So economic activities naturally occur in these locations. And they are the ones that will have to create the jobs. They are the ones that have to secure the citizens who live within their territory. So the only way out, as we see, is rather than continue to wait for a federal government that's struggling to help itself, we as states, particularly for us in Edo State, we've decided to move on and just do things. Imagine that there's no Nigeria. But there is. We can't exist without one. How would we survive? What will we do to keep our economy and our people going?
And now to our first conversation. The hospitality industry was one of the hardest hit sectors during the pandemic, with travel disruptions, lockdowns, and many other challenges holding the industry down. As we come to grips with the new reality of rising energy costs, squeezed incomes, let's get the perspective of hotel investments in Nigeria. Join us now is Aaron Garnier, Senior Director, Development Africa, Radisson Hotel Group. Join us via Zoom. Great to have you on the program.
Thank you for inviting me.
Yeah, so Aaron, quite a number of headwinds right now impacting that industry. But how is this affecting pipeline growth for hotel brands?
You know, we've been present in Africa since 2000, so it's been more than 20 years. And COVID was obviously a unique event during this period. So the impact has been delays in the pipeline but the pipeline is still strong. So we have 50 hotels open and 50 hotels under construction. So we have around 100 hotels in total in development in Africa today.
And talking about new deal signings, coming to Nigeria, how is that looking at this point?
The signings are looking good because the dynamic of the continent and the dynamic in Nigeria remains the same. There is a high demand and low offer of hotels. This dynamic has not changed. What has changed with COVID is that the access to funding is more challenging and the cost of development is higher because of raw material being more expensive, transportation being more expensive. So at the end of the day, the new signings are happening. In fact, 2022 has been a record year for us in terms of opening hotels. We opened 12 hotels in Africa in the past 12 months, which is a record, best year in the past 20 years. And the reason for that is our strategy in focusing in conversion, meaning in focusing on converting existing hotel into a branded Radisson, and also the delays due to COVID had an impact into the opening.
Right, and in terms of return on investment, how rewarding is the success of international hotel projects in Nigeria so far compared to, other African countries?
Nigeria is a key market for Radisson, and there is a good reason for that. It's we foresee to have much more hotels. We foresee to have 50% more hotels in the next 4 years to 5 years. And the reason is most of our owners are looking at expanding even more the existing hotels we have, meaning that they want more hotels on top of the hotel they currently own. And the reason is a return on investment. The return on investment is strong because the market dynamic is there. In Nigeria, most of the market is what we call domestic market. So regardless of the impact of COVID on the international market, we've seen extreme good results. For example, I'm currently staying at the Radisson Blu Lagos VI right now, and it was 100% full last night. So overall, the performance in Nigeria of hotels, due to the market dynamic and due to the lack of offer, is doing very well, and the return on investment is solid.
And some analysts say that demand is falling short. Right now, obviously, we have squeezed incomes, rising prices, at this time. How is demand, really looking right now?
Again, if we're taking the case of Nigeria and we can take the example of Lagos, we've seen the demand having an evolution in the past 2 years. And the main reason is mostly our hotels were driven by business segment, business customers, and what we call MICE, meeting and events and incentive. And with COVID and the fact that the borders were closed, we've seen a lot of leisure business not going abroad, but staying in the country and using five-star hotel for leisure purpose, which was not the case before COVID. So we see the impact today of having new segment, what we call in the business leisure, which is business customer extending themselves as leisure customer. So we see today our hotels being full 6 days out of 7 because of the fact that we are attracting business, corporate, governmental, and leisure business, all in the same product.
Yeah, but we've had rising energy prices, globally, and back here in Nigeria, we've seen the cost of diesel, skyrocket, and everyone is paying more for energy this time. How are you guys navigating all of this, and how's it impacting your ESG?
It's impacting heavily the ESG, what we call in the business here HLP, which is heat, light, and power. We've seen increase in many of our properties, and the key for us is to keep the business going while adapting to the market reality. And these elements we can control. What we can control is managing better our properties and relying more on saving better and being more conscious of the consumption. But the price itself is something we don't control, but we can manage as much as possible energy control and energy saving, which is part of the culture of Radisson for a long time. So we're enforcing existing processes in order to at least save as much as we can. But we're definitely seeing an increase into electricity, light, and power costing across our hotels worldwide, and not only in Nigeria or in Africa.
Now we know, most countries now are pledging, to move to net zero, at some point, and we also have, major businesses also looking to, move away from dirtier alternatives. How is that looking, going forward?
I didn't hear the last question. Can you repeat?
Yeah, I said, most countries are making pledges about moving to net zero, transitioning from dirty, fuels. And we also have businesses looking to, to have their net zero targets also. How is it looking, going forward with the net zero pledges?
Radisson is planning on reducing wastage and going to this net zero as part of a global incentive that is part of what we call our 5-year plan. And the sustainability aspect of our operation is quite central. So it's something that is part of our plan and very much in the heart of our strategy moving forward in Africa and globally.
Yes, and right now, Nigeria is still a hot market, at this point. But where do you see the industry, say, in the next 5 years?
We see the industry growing because Nigeria remains key economy on the continent. So we see more branded hotels in the key cities of Nigeria. And the reason for that is customers want more branded hotels. They are looking for more, obviously, safety, which is a key element that drives people in staying in our hotel, but also experience. And so thus I see more development of hotels in Lagos, in Abuja, in Port Harcourt, and in the key capital state cities of the country.
Yeah, quite an optimistic forecast you have there. But, we've had issues, in Nigeria, most especially insecurity. How are you guys, managing, with the insecurity in Nigeria? It's been an issue, most of this year.
Be very transparent with you. We've been facing, the security challenge has been, I would say, priority number one in our operation across our portfolio of hotels. And we're operating in 135 countries, which are places sometimes even more challenging in terms of security than Nigeria. So we have an entire team that is dedicated to this topic and review in terms of development prior all the different parameters in order to ensure that we are the most secure hotel, in fact, in the market. And this is a drive that we have as a promise to our customers, to our employees, to our stakeholders, but also it's an aspect of business because we also want to attract the right business, including the governmental business that is extremely focused on security. And so far, we are being successful at it, but it does require a lot of investment and also a lot of focus. And this is what we are doing in the best interest of everybody.
Right, and we also have the issue of forex. You know, most companies, talking about how difficult it is getting their money out of the country. How is it looking for you?
It's a process. So as everybody, we're very aware of it, and we comply with NOTAP, which is the governmental regulation that we are working with in order to have forex outside. It's just a process to comply with, and I think to have a lot of patience, but we are being able to work with it.
Well, very, very, very good that you're able to manage it, on your end. All right, thank you so much, Aaron Garnier, Senior Director, Development Africa, Radisson Hotel Group. It was great having your perspective on the show.
Thanks to you.
All right, so moving on now. After the break, we'll be analyzing Naira USD performance year to date, see how it's performed this year compared to other currencies. That's our next conversation. Do stay with us. This is Business Morning. Welcome back now to our next conversation. With the volatility in Nigeria's forex market, Bank of America is forecasting the official exchange rate of the Naira will be devalued by 20% in 2023. To discuss this and other matters now, we have Kelvin Emmanuel, CEO, Dairy Hills Limited, joining us from our Abuja studio. Great to have you on the program.
Good morning, Ladi. Thank you so much for having me.
Yeah, so quite an interesting forecast there from Bank of America. And they're saying the Naira is above fair value, at this point. What do you say, and what do you think is the fair value here?
Ladi, for me to answer that question effectively, I have to take you back in time a little bit. Now, if we go back to 2006, just after Okonjo-Iweala, then the Minister of Finance, and Chukwuma Soludo, the current governor of Anambra, and then the governor of the central bank, had successfully renegotiated Nigeria's debt and were able to get the Paris Club of Creditors to forgive Nigeria of about $18 billion. You notice that in the year 2006, we had Nigeria's inflation in one of those quarters at 8.2%, and we had the GDP growth rate at 6.1%. And if you're going to go by the rule of 72, which is usually a metric in economics that is used to calculate compound interest and inflation globally, you notice that for 72 divided by 8.2% inflation rate in 2006, just after banking reforms, you had about 8 years, 7 months for you to double the rate of inflation in Nigeria. And you also had 8 years, 7 months for the Naira to lose 100% of its value in 2006. If you divide 72 by 6.1%, you had 11 years, 6 months for you to double the level of GDP growth rate, which is a little over a decade. Now, let's come back to 2022. Yeah. In 2022, our GDP growth rate this quarter is 30.54%. Our core inflation is 20.77% for core and 23.37% for food inflation. Now, if you apply that same rule of 72 to 2022, you notice that you need 3 years, 4 months for you to double the rate of inflation that we currently have. And you need about 20 years, 30 months for you to double our level of GDP growth. So which means that for the next 2 decades, we don't expect the Nigeria's GDP to double at the current level of GDP growth. But what it also means is that in 2022, you need only 3 years, 4 months for Naira to lose 100% of its value. Now, let's go back to President Buhari's government. Over the last 7 years plus, the Naira has lost 100% of its value 3.5 times. So what Bank of America is basically saying is that the difference between the official market at 437, 439, and the parallel market, which is today, this morning at 750, and it's about 320 Naira spread difference, the official rate is not fair value. Bank of America is basically saying that they're expecting the central bank to officially devalue the exchange rate to 520. So if you consider the fact that Nigeria has lost, based on the calculations I did, Naira has lost its value by 100%, 3.5 times over the last 7+ years, you notice that the CBN is currently subsidizing the rate, and the official rate is not a fair reflection of the fact that from 199, which was where Buhari met the Naira when he took over in 2015, the Naira is supposed to be trading above 700 Naira based on that rule of 72 I gave to you.
Quite an interesting rule of 72 there. And looking at that forecast now for 520 for the official rate, what would then be the parallel market rate at that time?
So based on the rule of 72 I gave to you, based on the rule of 72 I gave to you, the fair value for the Naira today is supposed to be 720. And I'll tell you why. I'll tell you why this has happened. Let's consider the fact, Ladi, that over the last several years, yes, if we consider Section 38 of the Act that establishes the Central Bank of Nigeria as amended in 2007, Section 38 says that the Central Bank of Nigeria is a lender of last resort to the federal government. The Central Bank of Nigeria is not allowed to lend money to the federal government unless the federal government does not have cash anymore. The Central Bank of Nigeria is allowed to lend to the federal government only 5% of its real revenues for the previous accounting year. Yeah? And that if this window exceeds the space of 3 months and the federal government does not refund the money, it graduates from becoming an advance to becoming an overdraft that attracts 0.5% every month, right? So what can we say? For example, in the year 2021, Ladi, yeah, Nigeria's revenues was 30.9 trillion, which was somewhere around $9 billion. If we're going to calculate 5% of real revenues for the previous accounting year based on the CBN Act, Section 38, the Central Bank of Nigeria is not allowed by law to lend the federal government of Nigeria more than $450 million, which is equivalent of 200 billion naira. But what do we have today, Ladi? Today, the Central Bank of Nigeria has given to the federal government 100 times what the CBN Act Section 38 says, 22 trillion naira, which is valued at $48 billion. So if you consider the fact that cash supply, yeah, these monies that the Central Bank of Nigeria has given to the federal government in violation of ways and means lending of the CBN Act Section 38, it has caused cash supply into the economy. It has heated the economy. The inflation rate has responded to that cash supply, which has exceeded the production output of the economy. Yeah, because you have so much cash chasing too few goods. And we have inflation at more than 20%, and it has caused the acceleration of a devaluation and depreciation of the Nigerian Naira. So Kelvin, you can see a correlation between what I explained with the rule of 72 earlier and the ways and means lending that has been violated by the federal government of Nigeria.
So essentially, what is the penalty for that, for going above, that level, normally?
Normally, the penalty is for the CBN to enforce compliance and for the federal government to pay back. Because this 22 trillion naira that was given, it's not like it's money that Nigeria has. It's money that was printed based on the fact that the Central Bank of Nigeria has the power to print cash through a process called what they call quantitative easing. So the external reaction to a violation of the ways and means lending window basically is, I expect, especially based on the fact that just a couple of days ago, a news report came out that the federal government of Nigeria is planning to convert this ways and means lending that is unable to pay back, which was cash that the CBN printed against the federal government in violation of the CBN Act. They are planning to convert it to a 40-year bond. at 9%, which is unrealistic because at current levels, no sensible investor apart from Pencom that the federal government controls is going to be willing to borrow the government at less than 17% coupon per year. So the penalty is supposed to be a ratings downgrade. I'm expecting that the likes of Moody's, Fitch, and Standard & Poor's, when they have their next review meeting, they're going to downgrade Nigeria from Ba3 level down to a lower investment grade. I don't expect it to get to jump status.
We can't expect an oversubscription for that one then.
I don't expect any sensible institutional investor to buy a 40-year government bond, which is a violation of the CBN Act, for ways and means lending. And I'll tell you why, laddie. In the same section 38, it's stated expressly that the federal government of Nigeria cannot convert ways and means lending that it's refused to pay back or unable to pay back into certificates, securities, treasury bills, and government bonds. You know why? Because the same central bank that it's paying back is the same central bank that will need to guarantee any bond or any certificate or any loan that the federal government is taking. So how can the federal government of Nigeria want to convert the loans it's owing the CBN into a 40-year government bond when it's the same CBN that is owing that will need to guarantee the bonds that it's selling?
Quite interesting. But, you know, Kelvin, we're here now. What do you think is the way forward, you know, with this ways and means issue?
Laddie, first of all, the way forward is for the Central Bank of Nigeria to realize that the consequence for it to go with the current program or plan to convert into a 40-year government bond is going to attract serious external consequences, number one. Number two, the government needs to realize that a key for it to increase its revenue to GDP ratio, which is currently at 7.4%, yeah, and be able to rebalance its debt servicing to government revenue, which is currently at 108% and has exceeded 100% of the capital expenditure budget it has, is for the federal government to float the Nigerian Naira. And the reason is because if you float the Naira, what you're going to have is you're going to have increased government revenue from royalties that the government gets from selling gas and royalties that the government gets from selling crude oil. Yes? The way forward is for also the government to realize that, for example, yeah, Pakistan, that has a population of that is about 25 to 30 million, higher than Nigeria at about 230 or 235 million, if I'm not mistaken, actually uses 21.5 million liters of PMS on a daily basis. In 2016, the former Minister of Petroleum, Ibe Kachuku, said that Nigeria was consuming 29 million liters of PMS. In 2019, that number jumped from 29 million liters of PMS to about 59 million liters of PMS. Today, the federal government says, the NNPC says we're consuming 66 million liters of PMS, which means that the under-recovery for paying subsidy has gone up from about 1.9 trillion to about 4 trillion. Which is about 20% of Nigeria's budget for 2023. So when you see that the amount of money the government is spending in direct sales, direct purchase program, subsidizing PMS, is eating into the government revenues, it's difficult for the government to be able to comply with the ways and means lending window and begin to pay back the principal that it owes the Central Bank of Nigeria to rebalance the economy and to ensure that it's not subjected to a ratings downgrade. So you need to increase revenues. You need to increase revenues by ensuring that you plug the loopholes and you get Nigeria back above 2 million barrels per day, higher than the OPEC quota for this month of October, and the budget benchmark of about 1.69 million barrels per day.
Anyway, we've seen the NNPC Limited, you know,
train.
They're tackling, you know, all of that oil theft at this point and discovering all those illegal pipelines. So hopefully we get more output come 2023.
Yes, they're tackling the challenges with the oil theft in the Niger Delta, but I'm not exactly optimistic. And I'll be very frank with you. I'll be also kind of cautiously blunt when I say this, that I'm not exactly optimistic about the management of the NNPC. And the reason is because several months after the Petroleum Industry Act was signed into law by the president and it became an act, the first thing I was expecting Mr. President to do, knowing that NNPC is now a company, was to restructure the management and board of the NNPC. NNPC, the board of NNPC is not supposed to be political appointments, yeah, that will constitute it. The management of NNPC was supposed to be changed, yes, because it's baffling to imagine that from flow station to terminal, Nigeria has been losing more than 1 million barrels of crude oil on a daily basis, right? And that our 33 export terminals for our crude oil inventories across Nigeria, Nigeria is still using dipstick technology instead of metering technology. And it's shocking to also know that based on global best practices in the oil and gas industry, the NNPC will say, pre-PIA, it didn't know that they were tapping points for hot pressure tapping of crude oil from flow station to terminal. So this is the reason why I'm not optimistic about the management of the NNPC and the so-called progress they've made in identifying it, because I struggle to imagine that it is taking them until now, when Nigeria is at a precarious position, for them to see that these problems exist.
All right. Kelvin Emmanuel, CEO, Dairy Hills Limited. It was great having your perspective on the program today. Thank you so much.
Thanks for having me.
Thank you, Kelvin. All right, that was Kelvin there giving us the forecast for the Naira next year, actually analyzing what the Bank of America actually forecasted for the official rate of the Naira. Conversations will continue about that. All right, now let's head on to the markets now. We have Ini with the details. We did have that, shall I call it a blip yesterday about... Not convincing, but
no,
not
convincing at all. I did not convincing at all. A 0.03% gain after more than 6% down.
Triple over 2%.
Yeah, I don't know if we can even call it a gain at all, because the week has been deeply in the red.
Right.
We've lost the 45,000 points. We're down to 24 trillion. You know, so 0.03. I don't know if anybody
breaking
felt
new boundaries, new levels on the way down
downward.
at this point.
All right, let's look at the details of how the market fared yesterday. There you see that 0.03, very marginal recovery yesterday at 44,332.21. Equities is at 24 trillion naira. We look at the activities and we see the bloody spread still there. Volume down to just about 100 million. Value at 3.2 billion, and deals, I can't remember the last time we had deals at 2,000. At least we normally have 4,000, 5,000, at least 3,000. But here we see it's 2,909. And then when we take a look at the sectors, we see that banking has lost that positive vibes it's had for 2 days running. Profit taking obviously are setting when you see that some of the stocks have gained, and you see investors do a little bit of profit taking. Consumers is still in the green, 0.20. Industrial also marginal. Insurance 0.22, while oil and gas is in the red. We have Afolabi Benro now to tell us his perspective to this market movement and maybe what we can expect today. Hi, Afolabi, good morning.
Hi, Ini. Good morning. Thank you for having me.
Good morning. You know, I was. This week has been really hard because I love the equities market, and then we just saw that drop. I don't know if it's up to a drop of 0.03 yesterday. Just a vapor of gain, I would call it.
Yeah. So I think what I would say about yesterday's trading session was that majority of the value that was traded was due to Airtel. If you look at the week as well, the drop in the price of Airtel has contributed significantly to the drop in the value of the ASI. Airtel has lost about 27% so far this week. What we saw yesterday was that it was still actually trading at the lower end of the market, but there was no impact on its closing price, which is why the exchange was able to record a marginal gain in activities yesterday. Outside of trades in Airtel, the market was still very quiet and bearish. I think MTN traded some volumes around 195, which was flat on the day. But outside of that, the rest of the market was still pretty sluggish and bearish.
Well, somebody is predicting that Airtel will bring the market up today. I mean, after such a drop in its price, some people might want to take advantage of it. Do you see that at the close of trade today?
I mean, it's always a possibility. But with the way the market is open so far, it's not looking likely. It's looking very quiet, and then the supply has thinned out at current market levels. So except there's a buyer that's willing to pay up to acquire Airtel shares, it's likely that we'll probably see a flat close in the name again today.
Okay, and this downward trend, obviously it continues. Nothing to boost the markets at this time, at least nothing in the closest future.
Yes, in the short term, there's no sort of immediate catalyst that we're looking at. Prices are still quite cheap. If you look at the markets, the banking names, prices are still quite cheap, but this hasn't been enough to sort of entice investors to come and take advantage. So I think in the short term, we'll continue to see the same trend that we've been seeing so far.
Is there anything that can indicate to investors that we've hit the rock bottom and we might soon start, an upward trend? Anything that we can look out for?
I mean, with all these stocks, I think, everyone sort of wishes that we all had a crystal ball to know exactly when we've hit rock bottom. But the thing is that if you do your valuation, you're comfortable to take a position, then I would say, you go ahead and do that because you don't know when it's going to turn around. And by the time it turns around, especially in looking at historically the way stocks trade in Nigeria, by the time it turns around, you might have missed the boat already. So,
so depend on your own instincts at this time.
Yes.
All right, Afolabi Bimro, thank you so much for sharing your thoughts with us. Have a great weekend.
Thank you for having me. Take care.
All right, let's have a little bit of the numbers before Ladi will take over. The unlisted market is also down 0.01%, and the market cap is at 6.68 billion. Looking at the activity chart, just 11 deals and 4 stocks traded, valued at 6.68. A quick look at the fixed income market now, not looking so different. It's still a market that is waiting on liquidity and some macroeconomic parameters, if anything would change. Number of deals, 11 for the federal government bonds at 6.60. The treasury bills, also just 5 billion yesterday with 9 deals. And if we have the central bank and then the OMO, all right, doesn't look like we have that. So, Ladi, it's still a boring market for the fixed income, I mean.
But for me, a market on a downtrend, for me, is not boring.
No, it's not boring. That's why we can't say the equities is boring.
But I know for some people, it is boring.
It's boring because you're losing money.
Yeah, exactly. But, we that love to buy the dip. We love a downtrend.
All right.
Thank you so much.
Thanks.
All right, now we'll head on to London just after this break. Now, do stay with us. This is Business Morning. Welcome back. Let's head on to London now. We have Juliana standing by right there. Juliana, great to have you. And TGIF, great to have you. Happy Friday. But it's all about the massive, the big, resignation yesterday. And I'm wondering, Juliana, quite a dramatic turn of events yesterday. But how investors and market sentiment, how's it looking in the UK?
Dramatic is an excellent term, Laddie. Good morning. We're all barely recovering from what can only be described as a dramatic day at Westminster yesterday. The markets are barely recovered. In fact, the UK Blue Chip Index is down by about 50 points. The pound has also tumbled again against the dollar. I think one British pound will get you about $1.11 at the moment. And it's not just about the storm that's engulfed number 10 Downing Street. We've also had 2 key economic data this morning that doesn't reflect well on the state of the British economy. First is government debt. Government debt for the month of September has risen by £20 billion year on year, the highest number since September, in a September on record. This has got a lot to do with interest rates. The amount of interest that the government is paying is risen by, I think, 14%. And then the second piece of data is retail sales. Retail sales for the month of September slipped by 1.4%, higher than market expectations of about 0.5%. And I think that really just reflects the mood of consumers at the moment. They're just not spending. And the biggest fall in retail sales actually came from food, which is quite worrying because, of course, we've heard from the Resolution think tank as well as the Labour opposition party that families are on the brink. More and more of them, particularly those of working households, are using food banks. So aside from that, of course, I've got to talk about the leadership race. According to the Conservative Party, this time next week, we are going to have a new Prime Minister. I think the consensus really among the parliamentary party is that they kind of want a coronation. They want members to choose one individual so that we don't have to go through the horrid campaign that we went through during the summer. I've got to tell you, Boris Johnson is up there. Sources say that he is on a flight back from the Dominican Republic, and he has the backing of about 40 MPs. The leader is Rishi Sunak, and I think it's fair to say that the markets would like him. Of course, he called Trussonomics fantasy economics during the summer, and it proved right. So yes, it's all going on, but not reflecting well in the markets.
Yeah, quite interesting that we're seeing Boris there in the race at this time, and also wondering if he actually wants a job. Well, we'll get more updates from you later on, Juliana. Thank you so much. All right, now let's head on to other markets there. Quite a dramatic turn right there in the UK, but the crypto market is also looking quite dramatic this morning. We're seeing a pullback with the price of Bitcoin this morning. It did lose that 19K level this morning. But let's look at the sentiment there. It's 23 points, extreme fear. The sentiment in the market now, we're seeing more fear with traders now. They are quite jittery. Looking at how the price of Bitcoin there lost that 19K level at this hour. Let's move over to the market cap there. We see it's at $912.8 billion. That's down 0.78%. We see the volume traded just a minor pullback there of 4%. Bitcoin dominance inching back up to the 40% level. It was at 39% previously. Let's look at the price of Bitcoin this morning. It was at $19,053, down 0.33%. But this hour is trading below 19K. $22.75 billion. That's what's traded in volume. And we know I and India used to Fridays always having that sell-off. We're seeing it happen right now in the market. Price of Ethereum, $1,288. That's down 0.13%. We see volume traded in Ethereum, $8.29 billion. Let's look at the top alts by market cap. It's all red on that counter. We see BNB there losing 1.43%. Cardano is the biggest mover downward this morning, 33 cents, down 4.04%. We see eCash not left out. And XRP was looking like it was getting bullish again, but lost that level now, down 2.61% this morning. Let's bring in Gilbert Jopata now, a digital market analyst. Bring us up to speed. Great to have you, Gilbert.
Yes, good morning.
Yeah, quite a dippy morning we're having right now, and it's a Friday, not a good-looking Friday for the crypto space. But what's driving sentiment today?
Okay, so I am not always carried away by micro price surge. Just like in our last conversation, I told you of what I expect, because I look at the market from a macro perspective, and Bitcoin has been range bound. And like I said as well in our last discussion, what micro term traders do is like analyzing the beautiful building and forgetting that the ground, the earth, or the floor of that building is shaking. You know, we are in a macroeconomic, should I use the word crisis? And just like the Fed president of St. Louis, James Bullard, insists that the Fed must follow through on its anticipated rate hike, meaning that we are about to see another 75 basis point hike or more. The dollar is already structured for an entry, a dominance also, and a prolonged price surge. Any reports also in the US is coming out, and it doesn't look healthy. So these are moments to be a market sniper. These are moments to build a portfolio based on a solid investment plan, good asset allocation, and a strategy to survive any market condition. Because BTC, Cardano, Doge, Solana, on the balance of probability, are getting ready for a price spill on the macro level.
Right, and obviously having money on the side is the biggest flex right now in this market, because most people are in deep, in this market. But you did give your picks last week. How are they performing this week?
Okay, for my first pick, Metanep token, I think we moved from about 19 cents to about 36 cents, and presently we are ranging at about 32 cents. That's actually an awesome price performance, if you ask me. Like I said before, coins that are building during project building in the bear market always do well. And for Metanep token, it's not just building, it's have a solid and growing community, which is a happy community. And they have so many plans, like they are getting ready for a concert in their metaverse. And they are hosting Nigerian artists and some international artists. They are getting ready to announce their casino. They are also getting ready for their NFT mint. And presently, they are rolling out a staking program. So if you see a whole lot of fundamental events, it is logical for you to know that a whole lot of these fundamentals is going to keep pushing with the technical price that is structured for more upside continuation. If maybe I will make a price call, it's very, very logical, and it's mathematical for me to say $1 is on the horizon for Metanep token.
But XRP didn't look so good.
Okay, like I told you before, I always approach the market from a macro perspective. Nothing really changed about XRP. The little micro downside actually is still seated in the structure, which I believe is still positioned for a more upside. Like I said, there's a horizon of victory for XRP coming with in the court. Their prolonged court battle. They are gently having institutional backing, and the community is beginning to have high hopes. So with that structure and these fundamentals as well, it's still seated in the bottom that will still give us an upside continuation, which on the balance of probability, I still think will play out.
Balance of probability. Thank you so much, Gilbert. Great analysis there. We'll keep watching and tracking those prices, see how they perform. Thank you so much, Gilbert Okwata, financial market analyst. Now, so that's it for the markets. Thank you so much for watching. Don't forget to join us on Business Incorporated for more updates and developments in the world of business. And don't forget, you can watch this again on our YouTube channel. Just swip over to our videos and you can watch this again and all of the videos we have uploaded on our YouTube channel. Thank you for watching. Enjoy the weekend.